Hi there, everyone. Welcome to another Ainslie's Gold Silver Standard Insights. I'm your host, Joe. As per usual, we have Chris Tipper here to break down the morning's news. And joining Chris today, we had him on last week. It's Tim Kent from Kent Private Wealth. Now, Tim is a financial planner. So as such, we of course have to mention nothing we say here today about financial instruments, anything about investments is financial advice. Of course, do your own research, but you know all that already. So we are going to talk about a very important subject today. This is posted on the Ainslie website, and it's entitled US Midterms and How They Affect You. Now, in particular, how they may affect your investment portfolio. So welcome to the show, Tim, and Chris, over to you.
Oh, thanks, Joe. Well, the US dollar wrecking ball was back at it again last night, with the strength in the dollar putting a lot of additional pressure on assets and seeing a continuation of the already very stretched trends across a wide range of markets. The impacts of rates and the cost of living pressures have certainly been front and center of our thinking recently, but it's also important to not miss major upcoming events that also need to be on our radar and have the potential to change what drives the economy going forward. So it's great to have Tim back with us again today to discuss just such an event that is rapidly approaching. The US midterm elections are now less than 2 months away, and as the news points out today, when things are looking as challenging as they are right now, the vote rarely goes in favour of the sitting president's party. If we're looking at a change in the balance of power in the US Congress, we will need to be paying attention, as if history is any guide, there'll be a flow-on consequence to the markets across the board, and we can expect impacts to be felt here as well. So, Tim, what is your take on the current setup in terms of how it will play out into the midterm elections? Do you see some potential for volatility ahead in the markets from the election generally?
Yeah, good question, Chris. And hello. I think the volatility is going to be more driven by the Fed. I think the midterms are there in the background, and I think from the polling, which people will be seeing, would be that it's more than likely there will be some change, whether it be both houses or whether it be one. I think if, say, the Republican get in, the market would probably be, from an inflation perspective, more confident that there'd be more stimulus, like the recent bill that was passed, which was probably more stimulatory and more inflationary than what was probably required. So I think the market will be volatile, but the bigger gyrations are definitely still going to be driven by the Fed, what they're doing with interest rates, and what's happening with inflation. I think like I said, if there is a change, I think it'll be minor. But if the Democrats somehow win, I think the market, I don't think it'll be major gyrations in the market. I'm not looking at that. I'm conscious of it. And not necessarily positioning for it at all, just being aware in the back of my mind that maybe a Republican in one of the houses would potentially cause a gridlock, and that would be seen as positive by the market, then therefore less can be done. But yeah, it can be obviously a negative. During the GFC, when there was houses where there was two in houses, it did cause friction in getting stuff through. So if we do have a crisis, it may become an issue. But if we don't, and we sort of have an economic slowdown, interest rates stop going up, inflation comes off, that sort of environment, I don't think it'd have a major effect. But if we have a significant and a really severe type event like the GFC, yeah, it could have it could be a problem for the markets.
So can I just dig into that a little bit more? So we know, like you said, we've had that situation in the past where you basically get gridlock and neither side can come to an agreement. Are you sort of saying there that really it would take another crisis? And does that actually bring about the crisis? Is it a cause and effect situation, perhaps, that the crisis comes about simply because you can't get the government reacting fast enough to what needs to happen?
Good. I think no. I think the crisis would be a case of with the economy slowing and interest rates staying high, and you have a bit of a. But that's a very good point. It would accentuate the problem, like in the GFC, where they wouldn't pass. Some parts of the House wouldn't pass stimulus because out of spite or whatever it might be. So I think it would worsen the crisis. I don't think it would. Yeah, I don't think it would create the crisis at all. I think there's enough cash on the balance sheet.
There's enough other causes for crisis at the
Yes.
moment. Yeah.
Yeah, with the energy, inflation, interest rates that potentially cause a crisis in the global financial system.
Yep.
I think it would worsen it, where they would create fear that they can't pass stimulus to try and, one, stabilise maybe energy companies or whatever it might be, banks. But the banks are pretty good, but yeah, I think it would cause that it would accentuate the problem and cause a bit more fear, exactly like it did in the GFC, where the houses wouldn't pass, upper or lower wouldn't pass the pass. But I think the Republicans would be seen as a positive, because I think they seem to be making noises about less spending, reverting back to that, and as a result of that, I think the market would like that. There's less risk of inflation, more chance inflation comes down, so interest rate expectations would come down. So I think it would be a positive if the Republicans got in there. If they held both houses, I think that would be okay as well. But if the Democrats got in, I think it's more likely to be a split than one.
Than a clear mandate either way. Sure. So we tend to think of the Democrats as the big spenders and Republicans as looking to restrain, like you've said. But really, a lot of this got turned on its head during COVID, because we saw many countries around the world, also including Australia, the Conservative parties actually ended up being the biggest spenders with the biggest blowouts in history, really.
Yeah.
So do you think that maybe with a change of leadership, if we do see Republicans in, that maybe they've got a bit of a taste for spending, does that change at all? Or do you think it flips very much back the other way?
Yeah, that could, I think you make a good point, but I think both parties would have done as much spending. I think your point is that in previous crises, maybe the Republican or the Liberal parties said they would have spent less, but in both those situations, they weren't in power, so it's easy for them to say that. So I think both would have spent equal amounts. So I don't think I think they're going to be driven by the Treasury departments within those countries, which are going to guide them to advise the politicians what to do, and they get told what options they have and whether they want to go hard or go in the middle or go more conservative. So I think it won't. I honestly don't think it changes things. I think Warren Buffett's made a point in the past. I mean, he always votes Democratic, but he says he doesn't care. He doesn't worry about who's in power, because it's not a bigger influence of the economy as what central banks are, or just the general global economy. Than I think he, for example, perfectly does not at all worry about who's in power.
And I suppose that leads to my next question, and you've already alluded to this a little bit. Where does the Fed fit into all of this? Because our focus has almost exclusively been on interest rates and Fed policy recently. We haven't really thought much about government spending at all, to be honest. Do you believe that the Fed remains the main game in town, regardless of what happens?
Yeah, absolutely. I think example being China, for example. I might be going a bit off point, but they're obviously having a downturn more than they're sort of ahead of the curve in regards to maybe the economic cycle.
Yep.
So you're seeing they're trying to control inflation by having little stages of little spurts or of stimulus versus, say, a big bang type event. And they're doing that deliberately, I believe, because they don't want to cause an inflation problem, and they know that what effect that will have on the lower to middle class, how damaging it is for them. So they will just put and I think the US and other countries will start to do that. Now you're seeing in Australia, they're being more physically responsible, but if push comes to shove and there is an economic slowdown, governments will they will definitely stimulate still. Yep. And how they do it will be very conscious about inflation. But I think, like that recent bill passed in the US, I think governments they're showing restraint now, but I think in early 2023, I've read that that's when they could go again with another stimulus. But I don't think it'd be, a big bang event. It'll be just little, maybe in the US, I suppose 600 billion's a lot, but I think it'll be little type stimulus events. And they will just have those along the way to avoid creating, accentuating the inflation problem. That's what I believe. I don't think in Australia, I'm not positioning for the US, the Chinese economy to go on this big boom and the government to do a big stimulus package because it's just not going to work. They're going to have to just do little ones for at least a couple of years, I think. So
yeah, and there'll be a confidence element to that too, because I mean, people, you can't be saying, well, we've got to cut spending and then big boom. Doesn't make a lot of sense. And I suppose that leads into my last question really today, and that's the big one on everyone's mind: inflation. So bringing together everything you've talked about, where does this leave us in terms of the likely impact of the midterms, do you think? Firstly, will there be any immediate impact on inflation? Because obviously billions of people around the world front of mind. Does it impact on that or not? And does it change the longer term trajectory going forward, do you think?
No, I don't think it changes too much. I think the midterm won't have, I don't think it'll affect inflation at all. I think if there's any uncertainty around those elections, I think it may cause people to spend less and companies to pull their spending in. So it could have a positive effect on inflation. It may cause a slight slowdown economically, and that's been shown in the past that that's occurred.
Right.
So you have commodity prices come off, so that's an input into inflation, obviously one of the inputs. So I think you could have, and people might delay doing travel or spending because they want to see who gets into power. The same thing happened in Australia. Happened in Australia last year. There was definitely a slowdown. So that could be a positive effect on inflation. And, I think, like we discussed before, the Fed is, I believe, 100% the main game in town. What they're doing with interest rates, whether they're going to keep raising them or if they're going to pause. I see there's a couple of Fed governors talking tonight. If there's any talk of a pause coming, or they think they've done enough, I think the equity markets could rally, US dollar will fall, and I think obviously crypto could rally on the back of that. So, but I don't think we're at the end, that end cycle. It'll just be a bit of a bounce before potentially things finally find a bottom where we find where the US economy is. But that's the tricky thing. I think everyone's trying to understand how much governments are going to stimulate going forward and how bad they'll let it get. And so there's that mix. So you can't be too bearish, but I think be too bullish. But I think at the moment it should be just focus on the Fed.
No, that's great. So I take away from that we need to be paying attention, but not too concerned about that. Still keep our eyes firmly focused on the Fed where they belong.
Yeah, exactly.
Excellent. Thanks so much for that today, Tim.
No problem at all. Thanks, Chris.
Thank you once again, Tim, for being on the show. We always love having you on, and we look forward to seeing you next time. Chris, thank you as always, and we'll see you tomorrow on the next GSS Insights. But I'll get you, Chris, to head over to the Discord channel right now, and I'll share that for everyone to have a quick look at. This is the perfect opportunity to continue the conversation. Chris will be there for the next 1 or 2 hours after this video is uploaded, and that is at discord.gg/gold. That's discord.gg/gold. It is the place to be to continue the conversation, so head over there. And finally, as always, as we say here, balance your wealth in an unbalanced world. Take care, and we'll see you next time.